So do you think we would go to, say, maybe more of a sort of value investing type world where it's more about, I guess, cash flow returns, etc.?
Yes and no. So yes, to the extent that Facebook just went down 20%. You saw that, right?
Yeah.
Facebook is a piece of crap, right? What about Facebook makes our lives better, right? Facebook is not General Motors. It's not Alcoa. It's not General Electric. It's not none of those things. Although General Electric's not General Electric either now. But and Twitter and Netflix. Netflix is a poor man's HBO. It's a load of crap. And you know, Google's great at what it does, boy, pioneering. And Amazon, I will make the Amazon's done a great job, but a more pioneering version of Amazon was the Sears Roebuck catalog. Sears Roebuck took sales to a national and international level by putting out the catalog. That was the Amazon prototype right there. And they allowed people anywhere in the country to order goods and services from the catalog. So they didn't have to go to the country store and buy barrels of flour. They could buy prefab houses and parts for their cars and things like that. So I think we are going to go back to, we have to have the wake-up call that says you have to create wealth. And wealth might be defined differently now, but it can't be bullshit. Right? It can't be someone, you know, why did we put Salesforce.com in the Dow? We took out Exxon. So by the way, in 2020, I moved into energy stepwise. When they took Exxon out of the Dow, I said, okay, that's a bottom call right there. That's so stupid. They replaced with Salesforce.com. And then Jesse Felder told me, he said that, yeah, the S&P is, it used to be 16% energy, is now 2%. I go, oh, another bottom call right there. You tell me that the thing that fuels modern civilization, the source of the enthalpy that brings order to disorder, that's 2% of the S&P? That's nuts. And so I started going into energy, and so far it's worked out. Now, here's the counter argument to that, and that is, if we get a bad secular bear market, what John Hussman has shown us is that if you take the 10 deciles of valuation, you will find that all 10 deciles drop pretty badly. So I think the real buying opportunity is going to be, and I'm going into energy now because I got to get started. I can't just wait and wait, hoping that I'll be able to pick some bottom. So I've got to get started. I'm going into uranium and miners and stuff like that. But the real opportunity, if you want to say the buy of a lifetime, will be if we end up in some layman baloney moment. By the way, Credit Suisse looks like it's swirling the drain right now. Credit Suisse is down 16% today, and it's already denying that it has a problem, which means it's probably got a month left to live. And that's just the beginning. When you have a real secular problem, banks start failing, companies start failing, bodies start floating to the surface, bones are breaking, teeth are flying. That's what a real broken market looks like after years of monetary excess, years of constant growth of corporate debt. Corporate debt to buy back shares to pump the share prices, right? That's just the markets are about 100% overvalued right now, based on 25 metrics, about 100% overvalued. We got to wring that all out. Now, the energy stocks will probably get hurt, but stocks like ExxonMobil, Chevron, they're still okay. And I'm starting to buy them. I own things like Rio Tinto, which mines metals from all over the world. It's got no debt. It's got a good dividend. And so I'll say, look, I think it'll go down, but I'm starting to take positions in these various companies. And I think I'll get hurt a little bit en route. But I maybe this is the absolute top because even Dave is buying now. Maybe, but it's still only, let me do a little math. The amount I purchased is about 3% of my net worth. And the problem is, as you become a boomer and you've acquired a reasonable net worth, 3% sounds small and the actual quantity of money sounds large. And so it's a paradox, right? I remember buying $1,000 worth of stock seemed like a big, bold move. And now to take a real position, I go, what? I have to spend that much, So